Hello, everyone. This is Dylan Graff, again, Investor Relations. As we transition to our NFTs and cryptocurrency panel, I'd like to give a brief industry overview and sort of fill everyone in on what the next session will be about. So next up, we have NFTs and cryptocurrency. As of today, Bitcoin's market cap is 588 billion, while Ethereum's market cap is around 219 billion. Bitcoin and Ethereum are two of the most widely traded cryptocurrencies and together account for over 60% of all cryptocurrency day trading around the world. However, the COVID-19 pandemic has rapidly accelerated interest in crypto, with total trading volume at its highest point in 2021 and Bitcoin briefly reaching 65K before dipping back down to 30K. The pandemic has also created unique interest in non-fungible tokens, or NFTs, although trading volume has declined by 90% since its March high. It's notable that Andreessen Horowitz, one of the most active venture firms in Silicon Valley today, recently announced a $2.2 billion fund dedicated to crypto, solely dedicated to investing in crypto and blockchain startups. So we have a wonderful panel of speakers today who I will introduce in just a moment. But I'd like to point out that recently the crypto industry has actually taken a hit from increased regulatory scrutiny from foreign governments, including countries such as China, India, and Turkey, all which have banned cryptocurrency. Treasury Secretary Janet Yellen has also taken a very aggressive stance against Bitcoin, indicating that increased regulations domestically are likely as well. I'd like to give a brief intro to our speakers. Our first speaker is Joey Krug. Joey is the founder of a blockchain-based prediction markets platform, Augur, and is which was the first project to host an initial coin offering using the Ethereum blockchain. He's also the CIO of Pantera Capital, which has around 2.8 billion in AUM. Joey is an experienced investor and founder of multiple startups. In addition to managing cryptocurrency firm at Pantera, he's also a Thiel Fellow and Edmund Hillary Fellow. Next, we have Yida Gao, named one of Forbes 30 Under 30. Yida is a former VC investor at New Enterprise Associates, NEA. He was also previously an M&A investment banker at Morgan Stanley and a former consultant at McKinsey. He's an MIT grad with a BS in mathematics and computer science and co-founder of Strut Capital, which has 150 million in AUM, and he is now the general partner of Shima Capital. Last but not least, we have Joe Lau, also named Forbes 30 Under 30. Joe is the co-founder and CTO of Alchemy. Alchemy powers core infrastructure for leading blockchain companies and enterprises around the globe, enabling them to build better products and user experiences through next-generation blockchain infrastructure and developer tools. This is similar to what Microsoft and Apple did for computers. Okay, with that, I'd like to go ahead and hand off to Catherine and to our speakers. Thank you, everyone, for coming.
Great, thanks, everyone, and welcome to our most, controversial, exciting panel here, crypto and NFTs. Our last speaker mentioned a little bit, so it's a great segue for us to get started here. I know a lot of you guys are very excited about this panel, so I will start out with a few questions, and the audience are definitely happy. Feel free to join in and ask your questions. Please feel free to raise your hand and type your questions in the Q&A section. So to get started, for those of you who are not familiar with NFTs, can you explain the underlying technology and why they're valuable? Who would like to take on this question?
Yeah, sure. So so hey, everybody, my name is Yida Gao. Thanks for the intro and thank you guys for joining us here. So NFT stands for non-fungible tokens. And a little bit of difference between NFTs and traditional crypto is that each one of these tokens, they're both tokens, are different. So you cannot exchange one for one. So they all have unique characteristics. And that's why you see a lot of NFTs being used in things like digital art or digital ownership of physical assets, because it allows for the exchange through the blockchain, basically value that is differentiated. So you're still using the underlying technology of distributed ledger technology, but you're doing it in a way that allows you to exchange value that is unique. So that opens up the door for a lot of different use cases that you can't do using traditional tokens like a Bitcoin or Ethereum.
So I guess for a lot of us, we look at, the latest developments in the crypto world with blockchain and much, interesting in how blockchain can really affect some of the utility related areas. Joey, would you like to share with us a little bit about, your investment thesis here, like what you guys looking at Pantera? How do you see the changes? Like, what are the biggest changes that has happened in the last year or two?
Sure. I think from an investment standpoint, what's happened over the last year is one, has been a huge influx of, users, developers, and institutional involvement in the space. If you go back to March 2020, Bitcoin hit like 3,000. And then there's a huge wave of fiscal and monetary stimulus, which kind of pushed the prices of everything up, which led to a renewed wave of interest in the space. And there's really two kind of main use cases that we've seen traction around. One of them is DeFi, people creating these kind of new parallel financial system protocols, things like decentralized versions of exchanges or lending and borrowing, and then also NFTs. And I think on the NFT side, that's been much more consumer. It's sort of been the first, I would say, breakout consumer use case of the tech, like in the sense that you have people using it who don't really know anything else about blockchain tech, who probably never touched DeFi, but they're buying, NFTs on NBA Top Shot, which are like these kind of like video snapshots of specific plays that have happened in basketball games. So that's been an area that's seen a huge amount of growth. From the investment side, as an investment firm, we've mostly focused around DeFi, although we have made a few NFT plays basically, but we're sort of kind of just getting kind of our first few investments made in that sector. Historically, we've mostly been on the DeFi side, but I think NFTs are going to be big over the next 5 to 10 years, especially as like scalability problems get solved.
Great. And, as one of, let's go to the founder here, right? So it looks like Alchemy recently raised over 80 million for over 500 million valuation to become the AWS for blockchain. So why is Alchemy valuable for the blockchain system? And why are you bullish about the company's culture? Joe?
Yeah, hey guys. So kind of like, I guess, tying into this discussion, there's a lot of really exciting things happening in blockchain, NFTs, DeFi, like Joey mentioned. At Alchemy, what we do is we look at the ecosystem as a whole and how it's developing. And the thing that we're seeing is, like all technologies, you follow a certain path of adoption. What happens is developers build applications. Those applications bring in users, and then that usage pulls in more developers who build more applications, and so on and so forth. So it's very much a flywheel. The really interesting thing, though, if you look at technological revolutions of the past, you look at the personal computer, you look at the internet in the 90s, what usually happens in the very beginning is, in order for developers to build applications, they have to have really robust, really sophisticated, really powerful developer infrastructure and developer platforms. So if you look at the personal computer, nothing really started to take off until the operating system came to be, and that was the developer platform that developers could build applications on that we all use today. You look at the internet, the same thing. Amazon Web Services is a developer platform that makes it easy for companies and developers to build applications online. And that's part of why the internet today is so impactful and it's touched everybody's daily life. So when we look at blockchain, we see very much the same thing, right? Like DeFi, NFTs, gaming, all these are use cases that are potentially really fundamentally valuable. And blockchain in general as a technology is really fundamentally valuable. But in order for blockchain to actually reach mainstream adoption, there has to be a real powerful developer platform that enables developers to be able to actually build the applications and experiences that they want. So Alchemy is a developer platform for blockchain. That's what we're focused on. And like Catherine alluded to, we power a lot of these use cases under the hood. So decentralized finance, NFTs, anything that happens in blockchain today, most of the time, Alchemy is underneath as a developer platform to help power that.
So I see there's a question from Alfred, so I'm just gonna read it as we go. Would you, any of you can comment on the latest FTX deal? What's happening? Why are they valued at 18 billion in funding round now?
I'll take that one.
Go ahead.
We're investors in FTX, and we're also investors in Blockfolio, which got acquired by FTX. So I mean, I think if you look at FTX, it's one of the fastest growing exchanges in the space. If you look at kind of the evolution of exchanges in the space, I mean, I think you have, Coinbase, Binance, and then FTX is probably kind of the third pinnacle one or pinnacle development in the space of exchanges in crypto history. And I think if you look at what they've done, I mean, they built an exchange that's extremely fast and performant. If you look at when like liquidations happen in market volatility, usually FTX has the least liquidations because their liquidation engine and kind of cross margin system is one of the most efficient in the market. And so for that reason, they've grown really fast from like a trading volume perspective. But if you look at why their business is worth so much, it's because of the fact that their volumes are so extremely high. And then the other thing that's interesting about FTX is their volumes per user are also extremely high. Their volumes per user are higher than almost any other exchange in the space, even relative to a lot of their competitors. And so if you look at that as an investor and you say, well, they get more users, even if the volume per user drops off by half as you expand the user base, it's still going to become an incredibly valuable exchange. And I guess the last thing I would say on them is their CEO is just really aggressive, kind of fast-moving operator, and he's also quite well known in this space. He's always kind of out there tweeting and talking about things and kind of building awareness for the exchange. And so, from an investor standpoint, I think that's why they have such a high valuation premium versus, say, an exchange that has decent revenue, but most people aren't talking about. That makes sense.
And it seems cheap compared to Coinbase. And I think there's a lot of things that FTX can do from a product perspective that Coinbase cannot, just because they're based in the US versus FTX being offshore. So they can kind of innovate in this very fast moving industry, a lot better than some of their competitors that are worth more even.
All right, let's moving on to the next question. There are a lot of things happening in blockchain cryptocurrency. One of the biggest criticism of crypto is how volatile the market is. As an expert on crypto hedging, what is your investment strategy to identify the best cryptocurrencies and evaluate them from both a short and long-term perspective? Anyone, would you like to take on this one?
Sure. So I think in crypto, as I mentioned earlier, right, it's really fast moving type of industry. So for us, our fund, Shima Capital, is mainly focused on the earliest stages. So pre-seed, seed type of investing. And when you're investing into any type of company, right, you look at three things: market, founders, and product. For us, we care more about the second, especially in the early stages. So a lot of times when we make investments, the company actually pivots into something else. So for us, we really care about backing the right team. And one good thing about crypto is that you can have more liquidity a lot faster. And from our perspective, that's a double-edged sword, right? We come from more of a venture background, but when you invest in the crypto, you kind of have to think about liquidity and trading and making sure you optimize on the exit price. So we try to just focus on making sure we invest into companies, and we're a token only fund, so not investing in equity, but the tokens where the value should accrue for these projects. So we just focus on making sure that we can roll up our sleeves and help the companies out from a hiring perspective to building out their brand. It's a very noisy industry as well. So we as a seed fund try to roll up our sleeves and help out with bringing 10x the value to the company. And if we do that, the token price can fall 90% and we'll still be in the money. So from an investment perspective, we're investing, I think, across the different verticals within crypto, but getting in as early as possible and trying to just add as much value as possible to the companies.
Great, thank you. I think we have a question from Weiwei. Weiwei, would you like to ask your question?
Sure. Yeah. So we all know the recent regulatory news coming out of China and the US. With the government looking at the stable coins, isn't necessarily supportive of the whole industry. So can the whole crypto ecosystem grow despite the headwinds? or does the industry participants needs to develop a better relationship with the governments and kind of address those concerns? That's my question.
Give me the challenging ones. So I think in terms of the regulatory headwinds in this space, it's always sort of been a concern since day one. I remember 2013, 2014 or so, the IRS kind of published their first guidance around crypto. Then eventually we heard some things from the SEC and the CFTC and in the US side. Throughout the history of crypto, I'd say maybe going back to 2013 or so, there's always been lots of regulatory news about the space coming out of China. A lot of it's kind of fairly opaque and hard to follow, like what exactly the implications are of it throughout history. And kind of Western media tends to simplify it into China's banned Bitcoin is kind of what the headlines usually are over the years. They don't tend to go into too much detail about what actually is going on. But I think my answer would be, I think the crypto ecosystem could totally grow rapidly despite regulatory headwinds. And in fact, it has throughout its history. As any new technology matures, there's going to be more regulatory actions and positions and rules that you have to follow. And the same thing happened with Uber and Airbnb. It's starting to happen with social media. I don't see why it wouldn't happen here as well. But I think that's actually like the fact that regulators are looking at the space is because of the fact that it's working. As opposed to, like it being necessarily a bad thing. That would be my take on it.
Yeah, and I also think like anything China bans, you should invest in. And crypto, in 08, right, when Bitcoin came out, right, during the financial crisis, the whole thesis of it is that you need to have sovereignty of your own wealth and assets. And if regulations and regulators are going to ban that, I think it just fuels a fire for interest into the space. Now, there are a lot of different use cases of blockchain than just, being an asset that you hold like digital gold. But I think that's why, for us, we're looking a lot into privacy-centric protocols as well. If you make transactions, private, high level wise, it'll be harder, right, for governments to catch up. But like Joey said, regulations has been around for a long time in this space. They tend to move very slowly, and we can't kind of move at their pace if we want to, underwrite deals in our lifetimes. And I think, given some of the SEC's, just talking about the US now, the SEC's propositions around giving a safe harbor to tokens, if they're seen as securities of 3 years, you have time to change. And I don't think, the United States wants, the talented engineers and founders to move out of the country. So I think, it's generally positive light from our perspective in terms of investing into the space and how it can grow, exponentially in the next couple of years.
Yeah, I would also just add to, like, at the end of the day, where cryptocurrency and blockchain is today isn't the end game, right? Like, either it's getting a lot bigger or it's going to zero. And realistically, it's getting a lot bigger. So then the question to ask is, what are the things that have to happen in order for blockchain to reach that final stage of adoption? And regulation is probably one of those things, right? Because a lot of people stay away from crypto because there's unclear regulatory guidance. Certain institutions aren't able to invest. Over time, at least in places like the US, more clear crypto or more clear regulation is probably going to open up more opportunities for people that can't get involved today. So I wouldn't see it just as a bad thing. I'd also see it as potentially a good thing.
Great, thank you. So an area that I think we're looking at a lot is just overall, there's so many things happening, DeFi world. What are some of the most exciting DeFi projects, protocols that you guys are looking at, and why is that?
Yeah, I'll take that one. I think on the DeFi side of things, I think the most interesting thing that we're looking at is these kind of decentralized derivatives exchanges. So they let you trade assets that are, what I would call synthetic assets. They're things that are pegged to real world assets. And so a good example of this is Mirror Protocol. It's a protocol created by the Terra ecosystem. And what they allow you to do is they allow you to buy things like versions of Apple Tesla stock or Tesla stock that trade 24/7 globally at very low fees, and you can go long or short at any point in time. And that sort of gets to kind of like the original idea behind Ethereum is you can create these global, permissionless financial markets to just kind of run nonstop. And so that's like super cool to me. There's also like just trading crypto, right? I remember 2 years ago at Pantera, we never used decentralized exchanges. They just never offered better pricing. But at this point, we always check decentralized exchanges whenever we want to do a trade. And often they offer better prices, especially for ERC20 tokens, but even sometimes for Ethereum. If you're trading $5 million of ETH, you can in most cases actually get a better price on decentralized exchanges like Uniswap than you can on Coinbase, which if you told me that 2.5 years ago, I would have probably bet a lot of money that you were just wrong. And I'm like one of the most bullish people on the tech out there. I just wouldn't have thought that would have happened this fast. And so I think DeFi is like a huge, technological force that's going to have an impact, in my opinion, similar to the scale of the internet, but for financial markets. And if you think about the fact that like this concept that you can program money, it's really powerful. Whenever you add programmability to something in society, it tends to get really interesting. The internet and software in general added programmability to kind of like generic pieces of information. If you look at stuff like CRISPR, it's adding programmability to biology. And if you look at Ethereum and smart contracts and DeFi, it's adding programmability to money and finance. And so, I think it's probably, in my opinion, it's the most interesting. I'm biased, but it's the most interesting area in tech right now.
To add on to that, synthetic assets, we're super bullish on that space as well. And Pantera and us, we actually invest in a company called 1inch together that allows you to, do a lot of the trading on DEXs using the aggregator. And I think also DeFi unlocks a lot of traditional finance with the equities, even with real estate too. There's, if you take synthetic assets to another level, why is it very difficult for anybody in the real estate space to get liquidity? It's the largest market in the world, but it's also the most illiquid. So if you utilize Ethereum or other types of blockchains and get down to the primitives of DeFi, you can really easily come up with a system where you can start enabling traders to long and short zip codes. And that would allow them to, hedge out their risk during COVID, or, where you see prices in New York City fall, 20%, and, you can long other zip codes. So I think DeFi it doesn't have to just stay in, the parallel universe of crypto. But I think there's a lot of applications now that, layer ones and oracles are getting a lot better and a lot more performant, and also using, different types of platforms out there that you can start to enter into this larger market, which is traditional finance.
Let's jump more into maybe what's going on in the NFT world. So we saw that there's been a 90% decline this year since the March peak. What are some of the reasons for this massive decline, and should investors be concerned?
Yeah, I'm happy to take this one. I'd love to hear Joe and Yida's take on it too. I think at the end of the day, as with all technologies, adoption tends to be pretty volatile. People are still trying to figure out what exactly it means, what it does. There's some speculative value as well as fundamental value. So that's what you see the volatility for. I don't know who saw this, but OpenSea, one of the leading NFT marketplaces, one of the people we work with closely, actually just raised a round today. They raised $100 million from Andreessen. So is there still investor appetite? I'd say there still is. But the way I think about NFTs is, at the end of the day, like Yida was saying before, NFTs are it is a technology, but it's based in a lot of the same types of human psychology that have been around for a long time, right? The need to collect, the need to own, scarcity, those things probably aren't going away. So then the question I'd ask myself if I were an investor is, do I think that a digital version of these types of behaviors is going to continue to happen? I'm very bullish on it personally. I think it'll certainly stick around. I think the thing that's been really encouraging is NFTs as a use case have been something that has really hit the mainstream in a way that nothing else in blockchain has yet. So things like NBA Top Shot. There are lots of people who are in the NBA Top Shot ecosystem today who don't even know that it's backed by crypto or blockchain. So I think that in itself is bullish. I would expect, some volatility in the market, but I think as a long-term technology and use case, I think it has a lot of potential.
Yeah, I mean, I agree with everything that Joe said. I mean, I think if you look at crypto in general, it always just kind of follows speculative hype cycles, right? And NFTs are no, exception to that rule. I think like earlier this year, especially as like the prices of the underlying spot assets went up, the NFT market is so much smaller in comparison that, if you're somebody who made $2 million on crypto, you might maybe spend 10 grand on NFTs. And like if enough people do that, it boosts the prices and volumes and activities surrounding the NFT space up a lot. And then if you look at, prices of crypto now are down like 50%, 50 to 60%, NFTs are going to drop a lot more in terms of activity, because the first thing people cut when they feel less rich is they cut, consumption. They cut like luxury goods. They cut, things like that. And so NFTs are going to be the first thing people kind of cut back on. They just kind of hold on to their ETH. Nobody wants to sell their ETH at 1,700, to buy a $10,000 NFT versus somebody who feels super rich at 4,200 ETH might not even think twice about doing it. And so when the market comes back, I think this stuff will come back. And it's kind of nice anyways, because the quiet period gives entrepreneurs and developers and founders time to actually build things out. So by the time the next wave comes, things are much further along, infrastructure is much more mature, and it's all that more successful when the market does come back. And I think it will.
Yeah, and I think one cool thing about just this NFT craze over the last 12 months is that it's given a lot of free marketing, right, to the space. And now you see traditional, folks coming in here, be it, Fox Entertainment with their large 100 million plus, NFT fund, and other, non-crypto players. And so I think NFTs, although they started with, the CryptoKitties and, kind of crypto native use cases, I think there are a lot of interesting, non-crypto use cases that should be a little bit uncorrelated with the price of Bitcoin. And I think that's, super interesting to watch. And, we're looking at a couple of, companies in the space that are trying to, again, bridge the mainstream into crypto through NFTs.
Great, awesome. So we'll see if we have any questions from the audience. Please feel free to raise your hand again. And we will ask you to join us for the questions. In the meantime, I guess, is there, where do you see DeFi going in the next decade, right? Should investors be worried or excited about the trend towards government-run digital currencies? I guess we can say China, for example. So what's your take on that?
Yeah, I'll start. I think so. DeFi in the next decade, I think it's just going to become a larger and larger percentage of the world's global financial markets. It's kind of like basically sucking all the value out of them into this new parallel system. And 2 years ago there was under $1 billion in value. Now there's $110 billion in value locked up in DeFi. 5 to 10 years from now, it's going to be in the many trillions, I think. Should people be worried about government-run digital currencies, or should they be excited about it? The answer is maybe neither. They're kind of apples and oranges. Like, I guess if you use a computer analogy, it's kind of like the difference between mainframes and like the personal computer. Like, they're just not the same thing, and they're not trying to do the same things. And I think if you do look at government digital currencies, what China is doing is very interesting, especially from like an intellectual economic standpoint. They have the ability to print money and like require you to spend it, otherwise it disappears. It's probably not the best thing in the world, but it's definitely interesting from an academic standpoint. On the U.S. side of things, though, I don't foresee the government making a digital currency. The last tech product the government launched was healthcare.gov, and they had to have Silicon Valley bail them out basically for free to get their website back up and running. And now it's just a website. So making digital currency, I don't think it's going to happen. I think if the U.S. does do anything, it'll be because we partnered with the private sector. Because the U.S. already has, tens of billions of dollars in U.S. dollar denominated stable coins. They just need to reach out to the private sector and work with them on it. And I think the government will either just not ship anything, or they'll eventually realize that. That's my bet on the US side.
I think I think Joey covered it really well. I think one thing maybe to think about is introducing a wider audience to a digital currency. Actually increases the on-ramp to potential other decentralized currencies as well. So having a central bank stablecoin, it's different. I'd say it's orthogonal, but it does introduce people to the idea of that. And that makes it potentially easier for people, to convert some of that potentially to other things, depending on what the regulatory environment looks like in the country. So with all these things, I think, does it increase exposure and does it bring more people into the crypto ecosystem? I think the answer here is, it's hard to tell, but probably yes.
So my question here is around NFTs specifically and how they are addressing the entertainment space from a blockchain perspective. You have a couple of companies out there sort of creating specific blockchains for the entertainment space, versus the existing blockchains that are typically geared towards finance. Where do you see that growing and evolving, moving into the next, let's say, 5 years?
Yeah, I mean, just a quick thoughts here. I think it's a land grab right now, right? Everybody smells the money when it comes to NFTs in the entertainment space. I think a lot of the thoughts around entertainment and NFTs has to do with just a new form to monetize viewers. Instead of selling hats and t-shirts now, entertainment companies and brands can sell digital versions of that. That's the first kind of low-hanging fruit of what's probably going around in the boardrooms of these large entertainment companies. So that's one bucket. I think NFTs are capable of a lot more than just being a digital representation of something a fan would want to buy. It's a way to program relationships between fans and influencers and different types of brands and entertainment companies. So I think over the next, call it 2 to 5 years, I think the evolution of NFTs as it relates to entertainment will change into one where these larger non-crypto companies will realize some of the other unique features of NFTs that allow them to interact better with their users and fans. So I don't think it really will come down to one chain or the other. For the entertainment space, it's more about coming up with the use cases and features that would have fans coming back. So there are a lot of NFT and metaverse focused blockchains, like one that Dapper Labs came out with called Flow. And then there's a lot of other ones, and base layer protocols and layer twos, from a Solana to a Polygon to a Near. They're all focused on this large category of crypto. So I don't think it's going to be winner takes all. It matters more about the feature set that you can build out and how creative you can get with this new type of asset class.
Thanks, Yida. And just a follow-up question, and this goes to all the panelists. In terms of the NFTs that we're seeing today versus what we may see in the future, do you think that, and we were speaking about sort of gaming in the virtual world in the last panel, do you think that's going to enable more of sort of a mass adoption of the virtual world and commerce within that world, NFT specifically?
Yeah, I mean, it's, crypto in general, a lot of it comes from gaming, right? Tokens, skins, NFTs, and virtual worlds are, I'd say, related to gaming. Some of the largest virtual worlds in the world are created by gaming companies like CCP Games with EVE Online and others. So I think it does unlock something really cool. It allows not only the game developers and these virtual world developers to generate income and profit from what they create, but it allows for the distribution of value to people who contribute. And that's one of the core tenets, I think, of blockchain technology. And as it applies to metaverses and virtual worlds, yeah, I mean, I think, people have already been, spending tens of hours a day in virtual worlds. And this is, using blockchain allows them to actually generate income or transferable income into the virtual worlds that they already live in. And it'll be really exciting to see when there's interoperability, between different virtual worlds. I think we're a little bit far away from that right now, given that we're still trying to solve interoperability between base layer protocols. But that's kind of the next generation or next iteration of, what could be in the next bull or the next or the second bull market from here.
Great. And then I have a last question for Joey. Given your extensive experience as a co-founder and also investor, with your own Angela syndicate, what advice would you give to investors in the blockchain space right now? How can investors leverage the market excitement around crypto to identify most promising startups, and cut through sort of the noise? Because there's definitely a lot of things that I think we also should be careful about. What is your best advice to your audience here?
Yeah, I would sort of flip the question on its head and say probably invest in things that people aren't excited about. Like if I go back and look at, some of our best investments, two examples are, I'd say, the scalability area and the infrastructure area. On the scalability side, when we invested in Starkware and in Arbitrum, we seeded both of those. And like there were a lot of projects trying to raise in the space at the time. People liked the idea of scalability. There wasn't like this massive conviction around this concept that like if you solve the scalability problem, you'd be able to monetize it. I remember talking to other investors at the time, and people were always like, "But how will they make money?" And I was like, "I don't know. Like, who cares? They'll get usage, and if they get usage, they'll make money. That's a problem for later day." And the other area was like on infrastructure. I remember like when we invested, Joe's on this call, when we invested in Alchemy, at the time, every investor who I told about it, they said, "Well, what about Infura?" And I was like, "What about it? Like, who cares?" The problem is you have to have something that like is truly a 10 to 100x better experience than what else exists out there. And from the Augur standpoint, I'd actually used Alchemy, and it worked really well. It solved the problems that we had, and other node providers didn't really solve that problem. So like, it was obviously a good investment to me at the time. And so if you look at kind of like those sorts of investments, they're ones where the best investments are not ones where every other peer investor you have congratulates you for making the investment. Like I've made money off those, but like the investments that really, get massive are ones where people kind of have kind of a snide comment or remark at the time you made the investment. And nowadays in my investing career, whenever I make an investment like that and somebody says something kind of a little snippy, it always makes me smile because I'm like, okay, that's probably actually a really good investment. And so the punchline is like, just go where people are not super excited about, because that's where you're going to find better companies that are solving more interesting problems, and they're not going to be, woefully overvalued. You're not going to be paying 10x what fair value for the company is because it got all hyped up. Instead, you're going to be finding something that's fairly priced. And so that would be my advice.
All right. Well, thanks everyone for your input. And again, thanks for your time. Look forward to seeing everyone soon, and enjoy the rest of your day.